Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Thursday, January 9th. Mostly lower trade overnight in what will be an abbreviated trading session. The U.S. stock market is closed today, as well as government offices, as the nation mourns the passing of President Jimmy Carter. Agricultural markets close at 12:15 today, and weekly export sales are delayed until tomorrow. Right now, corn is the upside leader, trading steady to about a penny better as spreads also firm. Lower pretty much everywhere where else. Beans right now 3 to 4 lower. Meal prices are down $1 to $2. Oil is off, just steady to about 5 points lower right now. And wheat is 1 to 2 lower in two-sided trade. Tomorrow is also USDA report day. Traders expect slightly lower corn production and soybean production, as well as slightly lower stocks. Very little change expected for the wheat balance sheet. We see 2025 winter wheat acres coming in around 32.7 million acres. That's down about 700,000 from a year ago. The average trade guess here also expects very little change. The only change we see coming from South America is slightly higher soybean production from Brazil. Our 171 million metric ton forecast is up 2 million metric tons from the USDA estimate in December. We think corn will hold steady at 127 million metric tons in Brazil. In Argentina, our guess is that the USDA will hold steady this month, waiting to see how this recent hot, dry pattern across the central parts of the country there plays out for the next month. Confidence that beneficial rains will move into some of these drier areas of central Argentina and southern Brazil. It appears to be growing. Very early harvest is underway across Mato Grosso in east central Brazil. Mato Grosso is the country's largest soybean producing state, having planted just over 31 million acres this past fall. That's more than Iowa, Illinois, and Minnesota combined. Mato Grosso is also the largest corn producing state, accounting for roughly half of the country's second corn crop. March 25 corn will likely stay locked in here in this 450, 460 range leading up to tomorrow's USDA data. If heavy rains persist long enough across the central portions of Brazil, this could delay the soybean harvest, which also would throw back the second corn crop plantings. I've got U.S. ending stocks at 1.665 billion, near the lower end of the range. It will probably take a stocks figure falling closer to 1.5 to generate a price move back up into the $4.75 to $5 range. March beans likely to hold in the $9.75, $10 range before tomorrow's USDA data. If, and that is a very big if rains do start to fall over some of these drier areas in South America within the next few weeks, the path of least resistance will clearly shift back to the downside, bringing 950 back into play and possibly 935, the weekly low from last summer. March oil did break out above the 41 cent level earlier this week, and this price level now becomes support, which a level that was challenged and held overnight here on the March contract. Look for another sizable increase in the exports tomorrow from the USDA. Also, the U.S. biofuels industry does remain hopeful the Biden administration will announce a new producer tax credit before leaving office now in just under 2 weeks. March meal that did hold above yesterday's low here overnight so far, as it chops around the $300 level and its 50-day moving average. Wheat prices just can't generate much lift here, continue to grade sideways to nowhere, hugging the low end of its recent trading range. Still waiting some sort of stimulus to generate a short covering rally here. So pretty quiet trade, early close. We'll check in tomorrow with the export sales and USDA reports. Have a great day.